Hello, I'm Dan Langwa, VP Investments for the Calgary Foundation. With support from members of the investment team, I'm responsible for managing the primary endowment portfolio. The purpose of this webcast is to update listeners on the endowment's strategy and target asset allocation, as well as the fiscal year and performance figures and priorities for the coming year. Our team provides these updates semi-annually. There have been no changes to the endowment's target asset mix since our presentation in the second quarter of 2024. We continue to hold a slightly higher allocation to cash and universe bonds as we navigate the uncertainty surrounding the U.S. tariff announcements and the ongoing negotiations. Additionally, capital has been called by our private infrastructure general partners, so we're moving closer to the 25% real asset target. This next slide shows a list of investment committee members and the general partners and investment managers that make up the endowment. Recently, the Calgary Foundation made a new commitment to a private equity secondaries general partner, RCP Advisors. This is a new commitment as opposed to a reinvestment with an existing general partner. The mandate specializes in small buyout funds, and the commitment will help diversify the overall private equity portfolio while also moving it closer to its target weight within the endowment. A reminder that building out an alternative investment platform does take time. Strategic investment pacing allows for better diversification across assets, across asset classes, and time horizons. So it requires planning to achieve and maintain a target exposure to private assets. This slide provides a snapshot of performance for the period ending March 31st. The endowment reported a strong absolute and relative 11.4% one-year return. This return is in line with the policy benchmark, and it outperforms the median Canadian Balanced Fund by 1%. Over the 10-year, the portfolio has surpassed the median Balanced Fund by 89 basis points, ranking it within the first quartile of the Balanced Fund peer group. The endowment also achieved its 10-year real return objective, and over rolling 4-year periods, the endowment has outpaced the median Canadian Balanced Fund in 4 of the past 5 periods. Given the recent volatility in April caused by the Trump administration's Liberation Day, I felt it also important to mention performance for that month too. The month of April was down 1.8%. This loss is not surprising given the sell-off in all the markets that month, particularly the S&P 500, which fell 4.7%. U.S. tariff announcements continue to influence volatility and increase the likelihood of slowing growth in the U.S. and more globally. There is also mounting possibility of a recession, but that risk depends on the severity and the longevity of the unfolding trade war. While this uncertain scenario is driving market volatility, note that the endowment is very well specified and diversified and built to be resilient across various economic conditions. Management is monitoring the endowment's investment managers, portfolio positioning, and valuations as more information comes to light. Over the short term, uncertainty will exist around the actual year of tariff decisions, the ongoing negotiations, the amount of government stimulus initiatives, and the amount of monetary support, not to mention the lasting effects of forecasted global economic growth and inflation projections. These semi-annual updates, along with the quarterly performance reports we post to the website, will keep you updated on portfolio movements throughout the year. Next, I'll share some priorities for the coming year. We intend to move cautiously in this time of economic volatility. There's no need to allocate to new investments quickly when the portfolio is already well diversified. Still, we must remain methodical and prudent, particularly when pacing our alternative investments. We've been able to fine-tune our private asset commitment forecasting model to pinpoint our near-term search priorities. The endowment is underweight infrastructure, so we will be reinvesting within a few existing general partners as they come to market. We will also be researching private debt and equity strategies to determine opportunities to maintain the endowment's exposure to those asset classes. Over the next year, we'll be considering whether another asset optimization study might be in order. This plan will depend on whether the ongoing trade war significantly impacts the longer term capital market return expectations. Please feel free to reach out to the Calgary Foundation team if you have any follow-up questions about the contents of this webcast. Thank you.